NWOR every Saturday and Sunday at 9. Right now, we're being joined by Matt Schulz, Chief Credit Analyst at LendingTree. And we are simulcasting right now on YouTube, Clubhouse, WOR. So, Matt, for those who are not familiar with your work at LendingTree, give us your origin story for 30 seconds.
Well, my job basically now is to help people make smart decisions around credit, whether that's credit cards, buy now, pay later, personal loans, almost anything you can think of. And I spend a lot of time looking at and talking about consumer debt and people's behaviors as it relates to debt. And my background is that I'm a former journalist, graduated from the University of Texas with a journalism degree, spent quite a few years doing general news, and have been back in the personal finance space for about 14 years now. I got right back in the summer of 2008, right before the economy went to hell. So it's been a fun ride.
Wonderful. So you are talking about, in one of your latest surveys, 40% of investors pulled money from the stock market. You know, I'm kind of bearish, but when I read a stat like that, it makes me rather bullish. So 40% of investors pulled money from the stock market in the past year due to current events, and many regret it. Let's talk about the survey, what prompted you to do it, and then what were the results?
Yeah, those are big numbers, right? What prompted us to do it is just that how volatile the market has been, and also just that we at LendingTree and our various arms, whether it's Magnify Money, which is the site that put that survey out, or Compare Cards, or others in the LendingTree family, we're always looking at what people are doing with their money, what people are thinking about their money, how people are feeling about their money. And we wanted to kind of take a look at how all of that relates to the news that's been going on, because heaven knows there's been no lack of really rough news to digest for a few years now. So we wanted to take a look, and what we found was pretty troubling, especially when you consider that the most likely folks to have pulled their money out are the youngest investors. And as anybody who's spent any time in the market or in a personal finance 101 class knows, is that there's no better ally on your side if you're an investor than time. And for these Gen Z, younger millennials who are pulling their money out of the market, they're basically kind of shooting themselves in the foot and squandering a major advantage that a lot of us Gen Xers and older folks would love to have.
Yeah, also, many of them did such dumb decisions like buying Peloton or Block. And I'm not giving investment advice or telling you to sell stuff, but you know, if you think about all of the hot stocks of the pandemic, the Snaps, the Kathy Wood plays, they're down like between 60 and 90%. This is very reminiscent of the 2000 and 2002 style dot-com bust, where the dot-coms became the dot-bombs. So people are doing the exact wrong thing at the exact wrong time. So what else did your survey find? What questions did you ask?
Well, we looked at also kind of what specific news events were driving people to make these decisions. And to nobody's surprise, inflation, the massive rise in inflation, and the pandemic were the two biggest drivers of things. And that's not going to stop being the case anytime soon. But it wasn't just those two things. It was things like economic policy. It was things like the Russian invasion of Ukraine, climate change, things like that. All of these things that impact the way people think about their money and behave with their money. And it's really easy to, after you spend an afternoon doom scrolling through Twitter or looking through news sites or spending too much time on cable news, it's really easy to get freaked out and want to cut your losses. But again, the scariest thing is that the folks who are doing so aren't the folks who are doing so most often aren't the folks who are coming up on retirement. They're the folks who are in their 20s and 30s and who have plenty of time to ride out these stock market waves and are basically hamstringing themselves by pulling their money out.
So let's talk about the survey. 4 in 10 investors. Let's talk about the results. Let's go through it real quick. So what did you find? The data. 4 in 10 did what? I have this somewhere.
Yeah, about 4 in 10 pulled money from the market in the past year. And what we found is generally the younger folks are more likely to have done so. And of those who pulled money out, about 40% of people regretted it. And that's even just in the short term. And it's understandable because, obviously, we see these fluctuations where maybe up down 1,000 points one day, but up 300-400 the next day. And once you pull that money out, it's really easy to see where somebody could turn on the news the next day and go, oh man, it's back up 400 points. What have I done? I've just lost money. So it's really easy to have those regrets.
And your survey mentions 67% of Gen Zers, 57% of millennials, and 49% of men. What's the male link? Does that mean 51% were women or men are dumber?
No, it actually men were about 2 times as likely as women to have pulled money out. And that's a big number and obviously disturbing.
So
but
men are more emotional
is,
about their money than women.
Yeah, that's exactly what I was going to say. We've been doing these reports for many, many years, not necessarily this one, but reports of all kinds as it relates to money and people's behaviors. And time again, we see that women are more cautious, more conservative, not in the political sense necessarily, but just in terms of cautiousness and carefulness with their money. They're far more likely to be that way than men are. And a lot of times it's because they have to be, because of a lot of the headwinds that women face. But in this instance, it's absolutely a good thing, and it serves them well in the long run to be a little more cautious.
Oh, fantastic. So generally, women are better financial clients. I find that too. 9 out of 10 women are better. Just from a standpoint, no offense, men, I'm a man. It seems that women are less to do impulsive things. I get more sell everything calls from the men than the women. But anyway, so 70% of Americans say world news and current events factor into their financial decisions. This is most common among those whose annual income is between 50 grand and 75,000. 77% Democrats, 77% investors, 76% millennials. Talk about this, because this is interesting.
The most interesting part of that to me, or certainly one of them, is that 50 to 75,000 range, because it speaks to kind of where a lot of folks are in that spot, where if you're making a higher income, you maybe have been in the market a little bit longer, you might be a little bit older, you may have a little more experience on the financial side, so you might be a little less likely to yank your money out. If you are on the lower income side, you frankly may not have as much money in the game, and you may just not be paying as close attention because simply you're kind of working hard and keeping food on the table and knocking through that mile-long to-do list that you have. But it's those people in that $50,000 to $75,000 range that might have a little more money in, but may not have the biggest financial margin for error, and may be a little younger, and may be a little more squeamish about where things are. So you don't have that necessarily. You don't necessarily have that security from having a really large income and a lot of experience and a lot of time, but you have enough to where you're worried, and you may be a little more likely to pull that money out.
So we're going to take a short break, and when we do, we're going to talk to our special guest, Matt Schulz from LendingTree.com, about the link between party politics and money. When we return, this is Josh Jelinski, the financial quarterback. Don't touch that dial. And we're back. This is Josh Jelinski, the financial quarterback, with Matt Schulz. So your survey said that Democrats, 77%, were more likely to say world news and current events factor into their financial decisions. That's an interesting stat, because I would think that Republicans or people who listen to maybe conservative talk radio would actually be prone to do more stupid things with their money just because, oh, I don't like Biden, so I'm going to sell everything. Or is this data from when Trump was president? I think it more has to do with when the opposing side is in power to your beliefs, you tend to be more fearful in today's world. Any link to that or no? Just a thought.
I think that I think that you're right on there. I also do think that that sometimes when we see information about parties tending one way or the other, it maybe has as much to do with other demographics as it does with party affiliation. But it is interesting that in another report that we put out regularly at LendingTree, where we ask credit card holders about their confidence levels in paying their credit card bills in full in a given month, we've been doing this report for about 4 years, and we see very distinctly that confidence levels shifted significantly between Republicans and Democrats when the parties changed hands in the White House. And it's just very interesting to see. It's not like a 30 percentage point gap or anything like that, but it's certainly an indicator that that where you stand politically, which political party is in power, depending as it relates to your political views, can definitely color what you think, or at least what you're willing to share that you think, as it relates to your finances.
What's kind of cool about this survey is it actually rings true to my beliefs, helping people with money for, I don't know, nearly 18 years. I tell them, you might think the world's ending, but invest a certain way no matter what. Your political beliefs should not really govern the market, and your market beliefs a wise financial plan. I remember everybody's worried about Obama, and probably at the start of Obama was one of the best times to invest in the stock market. I remember, what was the S&P, 666 or something? And it was very ominous. And the Dow was around 6666 or something on March of 2009. That was probably one of the best times to invest. And that was just as Obama was getting started. And I remember market kept going down and down, and people thought we were going to be in a depression. Then all of a sudden, I feel like actually somebody must have got to President Obama, and they said, shut up, stop, be a cheerleader for the economy. And then he was, and all of a sudden, boom. Now the Fed helped for sure. There were a lot of macroeconomic factors that helped. Then people were very worried about Trump being president in 2016. That was a great time to invest in the stock market. Then people all worried November 2020, Biden would in and the market would tank. The market tanked now, but it didn't tank the first year that he was in. Actually, the market did surprisingly well after Biden was elected. So your financial plan should really have nothing to do with who's in power. And it should have nothing to do with current events. It should have to do with your time horizon. I mean, that sounds like duh, but people forget the basics. Asset allocation, time horizon. Markets have much more to do with economic cycles than who's in the White House. I mean, that stat's been well known, but still people worry. How much, if 77% of Democrats say world news and current events factor into their financial decisions, what is the answer for Republicans?
It was, I don't remember the number off the top of my head, but it was a little bit lower. It wasn't like half.
Was it like anything. 72?
Republicans are still very much influenced, but Democrats did respond at a higher rate. That's
interesting, because you would have thought maybe with Biden, maybe it's the Russia-Ukraine thing. Was this after Russia-Ukraine?
Yes, this was done in middle of April.
So what the crazy thing is this is saying news is actually programming behavior. Because you watch CNN after Russia-Ukraine, much more stand with Ukraine. If you watch, Fox News, they were a little more suspicious of what was going on in current events. So it's crazy how people's news habits on the left and the right are actually forming their worldview. People are not independent cogs in a wheel. It's kind of scary, actually. We're being programmed.
Yeah, I mean, people's view of current events and news and where they get their news from is a huge influence. And ultimately, it all comes down to emotions, right? I mean, we've all been at peak emotional levels, certainly going back to February of 2020 when the pandemic started, and it's just been kind of a nonstop crazy roller coaster ride since then. And really, it's been incredibly emotional. You've had more people seeking counseling for mental health and therapy and that sort of thing, and a lot of people who have embraced stuff like meditation and doing things to relax and to decompress amongst all of the craziness that's going on. And really, that's important to do in all aspects of life. But when it comes to your money, it's just absolutely essential, because people tend to make bad choices about their money when they do it in a knee-jerk emotional way. I mean, it's a reason why people at a checkout counter at your local department store offer you a credit card, because they know that you're going to get swept up in that discount that they offered you and not think about the interest rate and the fees.
Yeah, I do that all the time. I'm a sucker.
Along with that card. So it's really about regulating emotion and trying to be as steady and calm about these things as you can be. It's not easy.
Fantastic. So let's talk about credit cards, since that's an area of expertise. What does your credit card research suggest? And people are getting more and more into credit card debt, but what does your research show? And then what financial tips do you have aligned with that?
Yeah, the credit card debt's climbing, and it's only a matter of time until we hit new record highs, eclipsing what the numbers were back in late 2019 before the pandemic hit. People generally did a great job of paying down card debt in the darkest days of the pandemic, but now it's rising just because it's what it does. We as Americans spend on our credit cards. The only time where we've seen meaningful decreases in credit card debt since the 60s are in times of great economic catastrophe, like the Great Recession, or like the pandemic. So credit card debt is just what we do as a country. But it's really important now, with inflation rising, with the Fed continuing to raise rates at an accelerating speed, that people focus on knocking down that debt when they can, whether they're getting a 0% balance transfer credit card, a low interest personal loan, or even just calling your card issuer and asking for a lower interest rate on your credit card. That's something that people, 70% of people who ask their card issuer for a lower interest rate get one, but hardly anybody ever does it. And that can be a really significant way to save money, especially in a time like now.
Wonderful. So we're going to give you a final segment. Folks, give us a call, 888-988-JOSH, if you want the free 45-minute wealth blueprint, and you'll get a copy of the book Money in the Streets for free. So in this final segment, Matt, and this has been very enlightening, what do you recommend the average person do? You've done a lot of research with their money related to credit card debt. Any tips? Avoid it like the plague. Are you like a avoid all credit card debt person, or what tips would help people?
No, I am not a avoid credit card debt or avoid credit cards at all costs guy. I had $10,000 in credit card debt in my 20s because I just made bad decision after bad decision. But once I got it paid off, I've used it to my advantage, whether it's for travel or cash back or that sort of thing. So a credit card used wisely can be a really, really good tool. And it's something that folks with high incomes use all of the time, whether it's for something like a home remodel or to invest in a small business or something like that. It can be a really useful thing. Where you get into trouble is when you spend beyond your means, and when you end up missing payments or taking on too many cards, and you end up kind of not being able to manage all that you have, because a single payment that's 30 days or more late with your credit card can cost you 50 points or more on your credit score, and that's a really big deal. So it's important for people to take a credit card very seriously, because it can be a useful thing, but it can be dangerous in the wrong hands. So you need to know yourself. You need to know what you want to get from the card and how you tend to spend, and let those assumptions guide you to the right card.
Now, as we conclude, what financial tips do you have in light of your research? We mentioned focus on time in the market, focus on risk, focusing on tuning out news and current events. Any other financial tips?
Yeah, it really is about knowing yourself and knowing where you are in that time horizon. If you're in your 50s and 60s and coming up on retirement, it may be time to talk with a financial planner or have another call with them to make sure that you're doing what you need to do. But if you're 22, 23 and you have a little bit of money in the market and you're freaked out that it's fallen off a little bit, don't even worry about it. Put Twitter down, go for a run, or go check out the latest, go check out Top Gun at the movies, get your mind off of it, and trust that over time, that money is going to come back to you, because stock market tends to grow over time, and you have a really good ally with time on your side, so you should trust it.
Fantastic. Matt Schulz, LendingTree.com. Anything you'd like to plug, a book, or just the LendingTree.com Matt Schulz page?
Yeah, no, LendingTree has lots of great information on how to get loans, how to use them wisely, and also lots of different offers as far as tools that can help you, along with the ability to check your credit score and your TransUnion credit report on an ongoing basis. That's a really important thing to do as well. So check out lendingtree.com, sign up, and you can get your temperature taken really on kind of where you stand financially. It's a good thing to do.
Thank you, Matt Schulz. LendingTree.com. Just Google Matt Schulz. Schulz is spelled SCHULZ, right?
Correct.
Great. Thanks so much for joining us, and hope to have you on again in the future. And folks, we'll take a short break, so call us at 888-988-JOSH for the free 45-minute wealth blueprint. And when we return, we'll be back with your live questions on Clubhouse. This is Josh Jelinski, the financial quarterback. Don't touch that dial. Okay, and we're back. We're taking your calls. Matt, you can stay around. They said you had to go, so I was just... do you have to go?
Oh,
I thought you had to go.
Yeah.
Okay,
yeah,
well,
I have another call in a couple minutes.
Well, it was fun. We'll take care. Have a good one.
All right. Thank you. You too.
Okay, now we're live on Clubhouse and YouTube taking your calls on all matters financial. Folks, if you have a financial question, you can unmic. We can talk about the economy. We can talk about charting. We can talk about the real estate market. Let's go over the survey findings here. Half of Americans pay attention to Federal Reserve meetings, including 22% who say the Fed's rate decisions impact how they manage their money. So I'm going to throw this question out to the listening audience right now. So if you're on Clubhouse, just type in if you have a question and we'll go to you. But I want to know, does the Fed impact how you manage your money? Investors especially take notice, with 31% of investors saying the Fed is factored into their financial decisions, as do 30% of six-figure earners. So first, we're going to go to Shelly, who has a question. Go ahead, Shelly. You're on with Josh Jelinski, the financial quarterback.
Yeah, hey, Josh. I just wanted to get clarification on something the gentleman from LendingTree has said, that people were more or less likely to pay off their credit cards based on their political affiliation and who was in office at the time. And I wasn't clear on if that meant that they were more or less likely to pay it off based on
I think
who was in office.
The data, because I have the survey in front of me, 77% of Democrats in the survey, which is kind of interesting, said that world news and current events factor into their financial decisions. So the question was more or less that the world news and current events are affecting their financial decisions. I don't think it was about credit card debt. I'll go through the whole survey too as well. There's a lot of other tidbits that we didn't get to, such as inflation, 63%, and COVID, 51%, were the top two current events consumers cited as impacting their decisions in the past year. Inflation beat COVID. Other top responses included economic policy, 25%, and the Russia-Ukraine crisis, 19%. So more people were worried about inflation than they were Russia-Ukraine. I would say that's true with me. I'm also going to do some YouTube screen sharing where I'm going to go through some Fred data like the Case-Shiller National Home Price Index. I'm going to give you my outlook for the real estate market. So I want to throw it out to the listeners. I'll go with you, Shelly. Half of Americans pay attention to Fed Reserve meetings, and 22% say the Fed's rate decisions impact how they manage their money. Do you care what the Fed does in meetings? Are you among those?
Definitely not. I do come into the rooms and listen to the sentiments, but I am one of the women that the gentleman was speaking of that don't waver, and I'm very unemotional.
Yeah, that's interesting. I'd say it's funny. I'm in the financial business, but my wife is less emotional about money than I am. I would say that's true. A lot of men aren't honest about that, But I think men are inherently more emotional about their money than women. Except when you have like a death of a spouse, that obviously affects women and men. But I've noticed that women are more likely to hodl, whether it's stocks, whether it's Bitcoin, whatever it is, because they're like, hey, I made the plan. This money's going to go up and down. This money's going to be safe. They're more into financial planning, I would say, where men, maybe it's like we like to keep score, so there's a gambling element. You want to cut your losses. I think that's interesting. Go ahead, Shelley.
Yeah, maybe it's a little bit activity bias. If you think about men, of course there are women athletes, but men are generally active. They're builders, they're doers. They like doing things. So I think they just get bored and they just want to do something.
Yeah, sometimes the best thing you can do with your money is nothing.
And women our job in our minds, at least, is to protect the family, make sure the kids are provided for, make sure we always have shelter. So I think that's why it's a little easier for us to take a step back and look at the big picture.
That's a good point. Grace, what do you think? As a woman, do you think the survey that said men were more likely to make dumb decisions with their money by a 2-to-1 margin? Grace, what do you think? Women more likely to make better financial decisions according to this data by a 2-to-1. It wasn't better financial decisions. The actual stat was men were more likely to pull money out due to current events, basically, whether it's Bitcoin, stocks. Grace, would you find that true?
I find it very interesting, that whole statistic, because women tend to be more emotional. And but I would imagine a woman who takes thought in her finances probably is a little more less likely to be moving things around. And I think they're more nurturers, and they take time. They know it takes time to make something happen. And with men, I believe they're probably just very active, as far as they're up on the news. And if the statistic also says that the news is an influence to their decision, I think more men probably watch the news and therefore make decisions upon that. So those are my first thoughts about it. I don't like to make it a gender thing. I'm not sure if it's a male female. I know that's the way it was done, the study, but I think it has more to do with the understanding of what in their finances decisions are making.
No, good point. Yeah, these surveys are always fun to read. I think people are influenced by how the question is asked, by the content of the question. Like, I wouldn't say, having financial clients who are both Republicans and Democrats, I would say, from my experience, more people lean more conservative, allow current events. But I think the way the question was phrased was world news and current events factor into their financial decisions. I think if you said political events or who's in the White House, maybe that is. So it's also how the question's asked. But I would say, from my experience working with men and women, that when women understand the purpose of a financial plan, they are more likely to stick to it, where men tend to make dumber financial decisions because they have this bias toward doing something. I would agree with Shelley's point. I've spoken with thousands of people over the years, and I think with any generalization, you're always, doomed. There are going to be things that are inaccurate. I just find that I think women get, maybe it's the whole societal keeping score, and then like kind of the long-term nesting versus hunting gathering impulse. I don't know what it is, but that's
I would
interesting.
agree with that.
Yeah, where if you're nesting, you're saving for a rainy day. you're okay with the ups and downs a little bit more. But it is funny. I would say women are less emotional once they understand the purpose of the plan. Once they're, once they're educated and they do a great job understanding it, that's interesting. So any of these gender things, they're always, you can poke holes in them. Okay, next stat, we're going to go to, I'll go to you, Grace, and ask you this question. Do you pay attention to the Fed Reserve meetings? Question one. And does the Fed's rate decisions impact how you manage your money?
No, neither one. I don't really pay attention to that number. The answer is no.
That's good. Now I'm going to ask a man who wants to chime in. Any men want to chime in? Does the Fed?
Yeah, go ahead.
Tobias, does the Fed rate decision impact how you manage your money?
No, I'm in agreement with Grace as well. It's just something that I don't particularly care for because to me, it's just like the wind. Whichever direction the wind is going, I feel like that's sort of how the Fed is making decisions. So for me, it's just like a lack of trust, and I don't see much signal. But then again, the market does, right? It's kind of crazy how the market responds to, like 0.5% or 1% increase.
Yeah, I'll answer I do let the Fed impact my decisions. I don't think it impacts my plan. So I have a certain amount in different asset classes that are generally that I hodl forever. There are certain accounts, whether it's Bitcoin or stocks or insurance, I really just keep doing that no matter what. But then there's some money that I like to play with, and then I do take advantage of opportunities. And that is often influenced by the Fed, because I think so much of our market is now influenced by the Fed. Even though there are the people who say the Fed really doesn't matter, I think it matters for how the stock market behaves short term. Long term, I don't think it matters. Anybody who would say that the Fed does impact how they manage their money? Anybody want to answer yes to that? Or no? No, everyone's above the Fed. Okay, of those, we have a lot of rooms, though, that will say otherwise, but we shall see. Of those who say current events impact their financial decisions, nearly half placed a greater premium on building up an emergency fund. Gen Xers and boomers were most likely to focus on building up emergency savings, while Gen Zers and millennials were more likely to say current events impacted their living situations and their plans to buy and sell a home. Has anybody not bought a home and would like to talk about that? Anybody here not buy a home and would like to say that basically current events are causing you to wait on buying a home?
I wouldn't say current events. It's more the prices.
Sure, the price. So I would say that's, see, this is where I'm going to get my real estate update because we had Barry Habib on earlier. I don't get how a starter home in Shrewsbury, New Jersey cost $862,000. I do not see that that's sustainable. Shelly, where you live, what's a home cost that you're looking at?
I live in Vegas, and they're in the, I would say, high 400s, low 500s. But I was just in Alabama this week, and I had always heard, places in the South were more affordable. And everywhere I go on Zillow and look at properties. And I was looking in a couple different areas, and I was really surprised that homes in Alabama were $350, right under 400. I thought that was kind of high for the area.
You know why? I think that's because a lot of tech firms moved to Alabama because it's a big cloud computing hub, and then you have NASA and all the engineers. So I think a lot of companies originally moved there because the average price of a home, I'm talking 10 years ago, was like $100,000. And so that makes a lot of sense now. Man,
and people at those income levels, probably from areas they'd moved from, that's still very affordable to them.
Where are you looking near, like Tuscaloosa? Is that where the
Birmingham.
Birmingham and Tuscaloosa, they're growing rapidly because of affordability. And even nationally, probably $350 for a nice home. I remember I bought my forever home. It was like $475. I love my house. To buy my house today would be just astronomical. I don't know how people are doing it. I don't think real estate's sustainable. I don't see how people can pay this for homes. Chris, do you want to comment on that? Go ahead, Chris.
Hey, yes, my name is Chris. I'm here in Augusta, Georgia. And, the average home here is about $250. I'm here in the South, and about $450. You can get a really nice home here. I don't think it's sustainable. See, what happened is people's income is not, even before the hyperinflation. People haven't got a true raise in their job. A 2%, 3% raise wasn't keeping up with the economy. I have a friend that's very wealthy, and I never forget, he told me about 20 years ago, he said, just to stay even, you need about a 10% increase. Just to stay, because, the government don't put in everything, groceries, cars, gas. And with the way things are going, I almost think that you have to be entrepreneurial thinking to thrive in the new economy that we in the 21st century. And that's almost anybody, unless you live below your means and, invest the difference with smart investments. You have to, and even with the credit thing, credit is not a bad thing too, if the maturity is there. But most people, even like myself, when I was younger, I wasn't mature when I got the 3 credit cards. So I done dumb things, charging clothes and things of no value with that debt. But debt can be a good thing if the maturity is there. But it takes a very mature person, even with $50 million, if you don't do the right thing with it, it's going to go right out of your hand. And that's what happened to most people. They got a mindset of a coffee cup, and you dump a trash barrel of $100 bills in there, it's going to overflow. So the coffee cup has got to expand with the money coming in to hold it. Otherwise, it goes right back out. But I'm in real estate. I think the market, more maturity. Me and my wife are looking at buying a home right now. I would buy a home at 6%. My first house was 8%. But I would use more strategy now than any time before. I would get an amortization schedule, laminate it, and look at it every night. If my payment was if I borrowed $300,000, about $1,000 is interest, about $450 in the beginning is principal. I would be thinking like, how can I come up with $450 the next month to make 2 payments on this house? What can I do to make? A lot of people don't realize how easy that is. If you get an amortization schedule, look at the next payment on a $300,000, it's about $450. So if I made an extra $450 in the beginning, it's like making 2 payments. So if I can figure out how to make $450, I sent 2 payments in. If I can figure out how to make $900, I sent 3 payments in.
Yeah,
and that's how me and my wife has paid off real estate, cars, jewelry, and everything.
Yeah, so it's sort of like stacking sats, but with real estate. No, that's a good tip. But the one thing I want to go to the chart, the Fred home price chart. I don't see this as sustainable. This reminds me of 2006. My wife and I were newly married. We were looking to buy a nice home. We had some shack down by a river. It was really true. I bought a row home in kind of an interesting area. Not a bad area, but it was like $92,000. And we wanted to move, but we were just looking 2006. We didn't want to pay what prices were. And I waited and I bought our kind of forever home in 2010. And I want to go to the chart right now, Jim. Pop up the Fred chart. It's on YouTube. And what you'll see is, and again, I'm using the Dell screen that you can't even draw on with the stylus. But basically what happens is if you look at this screen, the peak of real estate was strong from 2000 whatever to all the way to 2006, 2007. It just started declining. And then 2011, 2012 is the bottom. I think that's where we're as it relates to real estate, it's like '05 for real estate. I think it's going to take 12 to 18 months. What's going to happen is basically eventually home builders will build more homes. They'll soon become more inventory. The supply chain issues will be resolved. I'm talking 12 to 18 months. And then great time to buy a house, I think it'll be 5 years from now, maybe 4 years from now. I do not think it's sustainable at higher interest rates and COVID prices. I think a lot of this is due to the fact that people think they can move 2 hours from the city or an hour and a half, buy a nice house. People are going to get sick of the commute. Commuting 2 hours, hour and a half, suburbs, things like that. Maybe I'm wrong. And I think the people who suggest otherwise are usually shilling real estate. No offense to our realtors here. So I think if you're a realtor, I think you got 12 months of goodness. You better sell as many homes as you possibly can. Because things are cyclical. It's like the stock market. Due for a correction. Real estate's due for a correction. But typically you got 12 to 18 months beyond that.
Can I ask a question?
Sure, go ahead.
Is my understanding that this time around home purchasing was a bit different because a lot of financial institutions bought a lot of homes, one of them being BlackRock, and they are not throwing these homes back in the market, which is also adding on to the small supply of homes out there.
That's the only thing that worries me. We don't really know how many homes they own. And will they create a nation of renters where, hedge funds will basically own all the residential real estate and then control? Like if you think about it, the average apartment used to cost, when I was a kid, like $600 a month? Now it's $2,500 a month is the average rent for somebody. And that's going to be a societal problem. So they're going to be politicians saying, ban Blackstone from buying homes. You haven't heard that yet, but you'll hear Elizabeth Warren talk about that. So go ahead.
What if these guys decide to dump all these homes into the market? What would happen to the home pricing?
Well, that's what I think is going to happen eventually. Can you imagine? We have ESG for funds. Can you imagine Elizabeth Warren and AOC going against Blackstone and basically saying they're the reason we have housing inflation and home inaffordability? I actually don't know if it's a good thing to have hedge funds own single family residences. I don't see how. I mean, I'm all for freedom, so let the market decide, but it is a troubling thing. We've never had this happen in the US. So, but as soon as an AOC or an Elizabeth Warren, there's big tobacco, big pharma, big Wall Street. There's going to be big residential real estate. I don't know what they're going to call it, but they're going to go after the people. They're all over Instagram and social media pushing, REITs and things like that. I could see it. Can't you? Any other comments on that? That's a great point.
I have a comment here. There's also, prior to the pandemic, I remember there was a lot of foreign investment into residential properties to park their money. So, for example, in New York, over half or almost half of the real estate in Manhattan was vacant. Nobody lived there. It was just Eastern European, Asian.
And a lot of Chinese people bought in Brooklyn. Yeah, exactly.
Yeah. So, that artificially inflated prices because of lack of inventory as well. And they also bid up the prices. So, on top of that, you got BlackRock doing the same thing. I mean, there's going to be a time they're going to have to unload. Is that time here? Is it coming? I'm in the market for a house myself outside of the Philadelphia area, the county surrounding it, and they're super inflated. We're talking about 30% increases in prices. A lot of that has to deal with urban flight. There's protests here.
Yeah, who the heck wants to live in inner city Philly anymore, right?
Yeah, there's shootings every day, so people are getting out. But one thing I do see in Philly is people are leaving, but someone's buying their ex-residence. So there is money still pouring into the city. Is it now investment for the future, speculation, or people actually living there? There's high rises still going up.
That's why I see 12 to 18 months. It's going to take a little bit of time for this to burn off the hotness. You're just starting to see things cool. Houses not selling at as fast of a clip. Some deals being had. But yeah, I think you got 12 to 18 months before you start seeing a more of a correction in real estate. But we shall see.
Yeah. I mean, another problem I see.
If you're going to see a stock market correction, you're going to have a real estate market. Generally, real estate follows stocks. You know, stock market crashed in 08, 09. A couple of years later, the bottom, people forget, the bottom in national real estate was 2012, January of 2012, according to the Case-Shiller Home Price Index. But go ahead, Nicholas.
I was also mentioning, I'm in the market for a house with my wife. And one thing I'm seeing is the new tax assessments for 2022. In a lot of cases, they've doubled or more. So, you know, I'm looking at homes trying to find something under $200 a square foot, which is very hard to find in the neighborhoods I'm looking at. And you're looking at taxes that went from $9,000 to $19,000 in one calendar year.
It's insane.
One of the reasons why some of these owners are selling their homes because they can't afford the tax anymore.
Now, I'm going to wrap up the show pretty soon, but that's a great point to end with. I want each of you to get locally involved. Vote every school budget down. I think as Bitcoin is separating money from state, I think we need to separate education from state, because essentially these governments are a cartel. Now they're charging 19 to 20 grand for property tax. It's absurd. And we have to untether taxation from private property. That's something right from Karl Marx. And income. Go, you know, if we all stand up to this, who can afford this? And we'll have the future that we'll tolerate. So get active. I mean, think about this. I live in a town where many of the kids are now homeschooled or go to parochial school. And we have 3 high schools. We don't need 3 high schools. They should close one. Consolidate it. Sell the land off. But every, school budget gets voted and approved. So unless we get active in our local communities, they're going to keep doing this stuff. And the governments will like it because that's how they're getting revenue. They're getting revenue from property taxes. So financial tip, vote down all of your school budgets. Now realize I'm a teacher. I'm not a teacher.
I have a question on your
My wife's a
thing.
teacher. I love teachers, but I think we need to separate education from state. Go ahead.
So my question, and maybe even a point, isn't the free market and the internet already doing this within education? If we actually understand, what is actually going on with the privatization of education, and although there is government issues alongside of all that, but as we see inflation taking hold and the price of education becoming less and less affordable, it ends up coming down to just a membership club with who and I would assume any really good business owner and entrepreneur is going to hire someone that maybe doesn't have that fancy degree, that has a lot of daddy's money and or buried with student loan debt, over someone that has drive, passion, and potentially gone and actually seek the information and found the education, maybe in an unconventional way, and maybe has proven a track record of some other things that would probably even put that person on a pedestal to be hired above the degreed individual because of aptitude and drive that should be more valued in an entrepreneurial environment than someone with just a fancy degree.
No, I agree 110%. My wife teaches, she's an English teacher by trade. She teaches a bunch of homeschool kids Latin and mock trial and debate, and all these kids are little geniuses, and they're, winning mock trial competitions, and they're 13. But the thing is, they still charge us, 20 grand plus for property taxes. So we're still being overrun by the property tax cartel, I know, in New Jersey. So I think we have to find a better way to educate our kids in terms of the cost, because now you can educate kids for so much. I mean, our kids are massively educated. I have 7 kids. Costs us a couple grand a year. Yet in Jersey, the average school gets 20 to 25 grand per pupil from our tax dollars. And it's funded largely by property tax, by the property tax.
We currently, same thing with us. We currently live in an area that has pretty decent public schools being taxed out the wazoo for it, and we don't even utilize them. We send our kids to private school, so it's an untapped resource. It's not even in the area in which we're paying taxes. So yeah, it's definitely a kind of a conundrum. But you pay for others to have good education. This is the socialism of it all. But ultimately, I think taxes should be something that should be brought out on a spreadsheet, right? We should have more of an accounting-based tax
No,
system.
exactly. But you could have, even if you had
Bitcoin
public
does
school,
this,
even if you had property taxes, where, whatever, instead of paying 20 grand, you paid 5 to help the kids who need public education. If you took $5,000 times however many people in the town pay, you'd have more than enough to pay the teachers, get rid of the bureaucracy. The teachers make 100 grand a year. There's so much waste and fraud in the system. It's horrible. Well, waste, fraud, and abuse. So I want to thank you all for joining me. I'm Josh Jelinski, the financial quarterback. Follow my club and follow me, follow the moderators. And folks, thank you so much for joining us. I can leave the room up if you guys want to talk about it. All the Bitcoiners in here, you can do a Bitcoin room. I have to go now, get back to work, and I'll be doing a room tomorrow at 9. I'm Josh Jelinski, the financial quarterback, signing 9 or 10. So stay tuned. Thanks for joining us, everybody, and you guys can talk and do your thing. I'll keep it up.